Hi everybody, Alex Employer from Expert Forex, and in today's video we're looking at comparing 9 Forex brokers and looking at the currency information that we can extract with our new currency selector EA. And some of the information is quite shocking to traders that haven't been exposed to the detail of currency activity. Now, as I've mentioned, we've recently launched the Currency Selector Forex robot that looks at the currencies from different perspectives. And if you're interested in more information, there's the link, but the clickable links, as always, will be in the description or in the commentary of the videos. And there's the video that I made just prior to the launch of that EA. Pretty popular video, lots of likes, so you can go and have a look at this video. The link to this video will appear on your top right hand side right now. Now, just to recap, there are lots of criteria that you can use to select currencies, and what we're going to be looking at today are some of these criteria. You can look at the spread, the minimum spread that the broker charges, the average spread that the broker charges, and the maximum that they charge. That's in pips, and then obviously in cost. How much does the spread cost? We could look at margins. We could look at the volatility on a daily, weekly, and monthly basis. You can look at the trendiness of a currency. You can look at the overnight charges charged by the broker when you have a deal that runs a few days. You could look at the day of the week volatility, when to trade the particular currency on a scalping or a swing trading basis. You can look at the weekend gaps, which currencies are the best for trading weekend gaps. You can look at the currency behavior, the correlation, those kind of things, and you can look at the currency history on the charts to see what kind of movements, what part of price action the particular currency likes. So there's a whole lot here, but in this particular video we're going to be looking at spread, volatility and cost, and we're going to look at overnight charges. Now, we've added a new table to our Currency Selector EA, and that is specifically to look at spread volatility. So how we look at spread volatility is we look at the minimum pip charged by the broker over a period, and by the way, this period is 0 because I just loaded this a few seconds ago. Then we look at the maximum pips that the broker charges for a particular currency, and then the average pips, and then we convert those into dollars to make it a more reasonable feel of how much money is involved. And then what we do is we say, let's look at the maximum amount charged as a percentage of the average. So that gives you an idea of how much the broker moves the spread away from the average from time to time. And that is really what we talk about when we talk about spread volatility, is how much does the broker move the spread away from the average from time to time. Now, you'll see that sometimes a broker will move the spread 2,000%. That's 20 times the normal spread. So if the spread was 1, it could go to 20. It could even go much higher than that. But this is just an example, and we'll see that this is not just an example, it's a reality. And this is what happens, and what traders don't measure and they don't know about. But it is a really serious thing, because let's say you enter a sell deal with an average spread of only 1. So you're down here, you've entered your sell, it's 1. You've put in a 15 pip target, which is over there, and then suddenly the broker moves the spread by 20 pips, and you will get stopped out, although the price has gone nowhere near your stop, because your stop is a buy stop, and the spreads affect the buy price, and you get stopped out. So that's how dangerous it is when brokers increase these spreads so dramatically, and they normally do that around announcement times and around weekends. But there are also ad hoc events where they actually do that a lot, and it's quite a big amount that they increase the spread by. Now here's an example of looking at our 9 brokers, and I'm blacking out the name here because I'll explain that a little bit later, but here you can see the minimum spread variation and the maximum spread variation. You can see all brokers have quite huge maximum spread variation, and here's one that's got 2,000%. So they've moved their spreads by 20 times the normal amount. And you can even see those ones, 1,300, 1,100, huge amounts that the brokers actually increase their spreads by. Now, why do they do that? Because they can't control the selling price. What we've done here is we've looked at the weekly average true range on the euro based on the selling price. And you can see all the brokers basically have consistent selling prices. The weekly ATR for the pound yen, again, all the brokers have really consistent selling prices. So the selling prices are basically the same for all the brokers that we've looked at so far. So they can't do anything about this, but they can do a lot about the buy prices, and how they do that is they increase the spreads. So although some brokers, like here, this broker looks so fantastic, the average spread is only 0.3, and yet it can increase that 0.3 by 20%. So you might look down here and say, oh, this is a fantastic, I'm going to trade this broker, but you don't know about spread volatility, and that's the whole purpose of comparing brokers to each other using their actual statistics generated by this EA. This EA, unfortunately, generates, if you bought this EA, you'd only run your own broker on that. We are in a position where we can run lots of brokers, and we will be adding another 5 or 6 brokers to this list pretty soon. But these are the kind of statistics, and they're scary if you look at the amounts at which brokers increase their spreads. Now, I did make a video of this a while ago. It didn't get as many hits as the previous video. It didn't get as many likes as the previous video, so it's not something that traders take seriously, but it needs to be taken seriously if you have sell transactions open when these kind of things happen. And there are tools. There's a free tool in this particular video that you can download and monitor your broker's spreads. Again, the link to this video will be in your top right hand side, and the links to those free tools will be in the description of the video. Now, the reason you saw some of those broker names blocked out is that is paid information. We have a forum which is a paid forum, and only paid members have access to that kind of information. And here you can see the forum. It's the Forex Trading Setups forum, and here is part of the paid section where we discuss spread volatility, overnight charges in terms of broker comparisons. And lots of our clients will be contributing their own findings in terms of the Currencies Selector EA, and we'll be adding to our database that you've just seen that has started just recently. And there's a great opportunity to discuss brokers and currencies in this particular forum. Now, if you want to join this forum, just use this link and you will see a facility how you can join the forum. There are lots of other things on the forum where your Forex trading can benefit from, and we are constantly adding more and more Forex trading opportunities for our members. For instance, we have just recently analyzed the Forex trading signal copying services that are on the market. There are about 10 really good ones, and we've analyzed them. We're actually trading those signals for our members to give them an idea of how robust and reliable those signals are. So I suggest you use the link shown to have a look at that particular forum. Okay, so the second table that we've added is the swap and margin table, where we look at how much brokers are charging for swaps for when you have a buy transaction and when you have a sell transaction in that particular currency. They will charge you what we call an overnight fee for financing your transaction. In this case, it's 0 because this particular broker doesn't charge an overnight fee, but this table will extract all the fees if your broker does. And if you want to know more about swaps and how they are calculated and all that type of thing, here's a great link to Pepperstone. They actually tell you how the swaps are calculated. So I'm not even going to try and do that. It is quite complicated because it involves both the currencies that you're trading when you trade. But here are some of the swap fees that have been extracted from the 9 brokers. And you can see they're pretty consistent. None of the brokers are going crazy and charging highly excessive fees. And this is based on the euro, for instance, and there are the charges. And if you are buying, so they'll charge you that. If you are selling, they'll actually pay you that. And these are based on one lot, a main lot transaction. So if you had a main lot open overnight, that's how much they'd charge you, and if you were buying, and that's how much they'll pay you if you were selling. Now you'll see there are 2 that don't charge overnight fees, and those are very specific brokers that don't do that. And the margins are also very consistent. So again, the brokers don't have a freedom to play around with margins. So in general, the margins are pretty good. It's interesting, though, that the weekend gaps that are created by the brokers differ a bit. And the reason for that is that various brokers close off on a Friday at a different time and open up on a Monday at a different time, and that is why some of these gaps are very inconsistent. If you drill down, you can find the currencies that are generating these gaps, and that's pretty good information. Again, if you purchased this EA and monitored the variations of the spreads, and you don't have to do it for the currencies that you're trading. You can actually monitor your whole list of currencies available from your broker using this EA. You will be in for a huge shock. And many traders come to us and say, look, I'm not getting the same results as you when I trade this particular EA. And this is one of the main reasons, because they're using brokers that have huge spread volatility. So spread volatility is a huge factor when selecting currencies and selecting brokers. Now, I hope you found this video interesting and that I've given you some ideas about what goes on in the market in the background without you knowing it. So from me, Alex Deploy, cheerio.